The Southern California apartment markets have been consistently underperforming for much of the past few years, but we've been saying for a while now that these may have some upside potential. Are they finally emerging? We're going to take a look. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons, and Greg Willett joins me as we look at Los Angeles, Orange County, and San Diego. So, Greg, what's the verdict? Is the upside potential here finally playing out?
Well, these third quarter numbers are certainly the best we have seen since the pre-recession period. And you've got some meaningful momentum across the board. And across the board is an important part of that sentence there. And it really does feel like a regional lift rather than a one-off bump. But we do want to keep it in perspective and not oversell the story. The upturn, while there, is not huge, and you compare these markets to Northern California, which that region is the performance leader for the country, and there's still a big margin there.
And let's dig into the numbers a little bit. And what we are really showing is that the Southern California stats have actually started to move a little bit above the U.S. norm. And where you really see this play out is in the annual rent growth numbers. Orange County is now on top for the SoCal region. Annual rent growth there as of Q3 registers at 4.1%. That's up from an average of an even 3% over the past 4 quarters, or I should say the previous 4 quarters. And for both Los Angeles and San Diego, the annual rent jump as of Q3 registered at 3.5%. And that's up from an average of 2.7% in LA over the previous 4 quarters and 2.4% in San Diego. And for comparison, the U.S. annual rent growth number as of Q3 is at 3.2%, and that's inching up from an average of about 3% over the previous 4 quarters. So, Greg, any thoughts to share as you look at those numbers?
As you dig down into the data, there is one really interesting neighborhood level story, and that is in Orange County's North Irvine submarket. This is the one spot across Southern California where there actually has been a lot of new construction completed already. As we went through the lease-up process on those units, you did see rent change actually go negative really briefly, but that product has leased up so well, so quickly that you're actually back in really solid rent growth performance mode now. And in fact, that neighborhood is one of the leaders for the region with annual change of positive 4.9%. But looking past that one story and focusing in on the influences on rent growth, there's not a lot to see there. The economy is okay, and certainly some job production is occurring, but it's not spectacular, and it really hasn't moved much from where it has been. Same story on occupancy. These are good numbers, but they haven't really moved a whole lot from where we were previously. Just to run through those pretty quickly, we've got overall occupancy at 96.8% in San Diego, 96.4% in Los Angeles, 95.9% in Orange County, and then the U.S. norm, 95.4%. So again, a little bit above the U.S. number, but not a lot of movement there. So when we've talked about upside potential for these markets, what we've really been talking about is owners and operators regaining some confidence. As you look at this past cycle, Southern California hit hard in the recession, slow comeback, very, very gradual. It's just taken a while for owners and operators to realize that the market is back in good shape now, and so they're sort of catching up on where they should have been pushing rents previously.
So if that optimism is building, does that mean the rent growth numbers are going to continue building as well?
And they might for a couple of quarters. But in the big picture, probably not. And the influencing factor there is confidence seems to have returned just at the same time that we've kicked up the new construction volume. And it's not a huge amount of product on the way, but it probably is going to be enough to bring down the overall occupancy rate just a little bit. You've got to get those properties through lease up, and you tend to be conservative on pricing at the top end while that's happening. So I think best case scenario, when we look a year from now, rent growth will be about where it is at this point. And our baseline scenario is actually that it slows down just a hair from where we are at this point.
And Greg, one thing we have not talked about is the Riverside, San Bernardino area, the Inland Empire. And the reason for that, as you know,
there's a reason. We didn't
there
talk
is a
about
good
that
reason.
one.
It's on its own special cycle. So has the Riverside, San Bernardino area been part of this regional upturn of late? And the answer is No. And it certainly hasn't been. We could dig into that one another time. So for now, let's wrap it up on the Southern California Outlook. For Greg Willett, I'm Jay Parsons. Thank you for watching Apartment Market Dynamics.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.